Discover how artificial intelligence can help you maximize returns and minimize risk with your investments. Are you ready to take investing to the next level? Do you want to look to make smarter decisions while minimizing risk and getting the best returns? If so, you need to understand how AI-driven investing strategies can help. This video will give you a comprehensive overview of the potential benefits of using artificial intelligence or AI in your investments, and the ethical considerations to keep in mind. Discover the power of this rapidly advancing technology and learn how you can use it to take advantage of the lucrative opportunities it presents. Now that you know the potential benefits of using AI-driven investing strategies, subscribe to Life Hacks and stay tuned for more videos that will give you the latest insights and tools to help you make smarter decisions and maximize your returns. Click the subscribe button now and keep watching to learn more. AI can be really helpful when it comes to investing, analyzing how stocks might do in the future and helping you decide when to buy or sell. With AI-based trading tools, you can keep an eye on your investments and take advantage of market trends. You can also use sophisticated algorithms to predict risk levels and get advice on the best strategies. This means you can create a portfolio that's tailored to your goals and helps you get the best returns while minimizing risk. In the end, using AI models in your investing toolkit can make a big difference in how successful and profitable your portfolio is. What approach do you think best reflects your values and investing skills? Choosing the right AI model for investing is all about finding the best way to match your goals and values with a tool that can help you reach them. Each model has its advantages and disadvantages, so doing your research on each one allows you to find an approach that fits your needs. Machine learning models allow data analysis, natural language processing, and can give you insights into market sentiment and neural networks that help you discover patterns in existing data. All three other unique benefits when used in combination with other traditional investing methods like fundamental or technical analysis. Understanding how artificial intelligence can be used in different investing strategies can open up new possibilities. It can help you make better decisions based on sophisticated algorithms and your own personal goals, ones you may not have thought were achievable before. What new ideas can you come up with when you combine the concepts of risk and reward? AI can be a great help for both new and experienced investors. Not only does it give you insights into the market, but the AI-powered tools can help you stay up to date with events that could affect your investments in real time. AI models use sophisticated algorithms to analyze large amounts of data quickly, so they spot patterns and trends that you may not have seen before. They can also help you make decisions when the markets become unpredictable, by reminding you of when stock change prices more than expected, or alerting you about any updates related to your investments. With natural language processing, machine learning, and neural networks, artificial intelligence is becoming a valuable tool for investment analysis. It can provide actionable solutions backed by intelligent software while removing human emotion from decisions. This can help you find more precise opportunities with higher returns than traditional methods. But what implications does this have for privacy issues surrounding personal financial information? What implications does artificial intelligence have for privacy issues surrounding personal financial information? Leave a comment below with your answers. Using AI in investments can also offer huge advantages for investors, providing a sophisticated approach that can analyze huge amounts of data and spot patterns and trends quickly, something human judgment is not so good at. Plus, it helps you make sure that the investment decisions are based on facts instead of emotions, leading to more profitable results in the long run. However, there is still uncertainty about privacy issues concerning personal finance information, as well as potential biases within certain AI models or strategies. These can cause problems if not monitored carefully, but that doesn't mean AI should be completely disregarded. With proper monitoring, such risks can be managed, allowing machine learning technologies to open up new possibilities for the future of investing. Ultimately, how much trust do we put in a machine versus our own judgment will play a big role in whether or not AI-powered options become mainstream among professional investors around the world. But what principles should guide us in making these important ideological decisions? Using AI in an investment portfolio can be daunting, but there are always ways to do it responsibly and effectively. It's important for investors to understand how AI works so they can decide if a particular model or strategy will give them the results they want. By studying different approaches like machine learning algorithms, data analysis techniques, natural language processing tools, and neural networks, investments can become more personalized with reliable data support. Investors also need to consider potential biases within certain models, which could affect their decisions if left unchecked. Additionally, managing computing resources efficiently while controlling privacy issues surrounding personal financial information needs careful evaluation when making investing choices based on AI strategies. It's lastly essential for any investor considering an AI-driven approach to understand what principles should guide them in order to make these decisions. What ethical questions do they have a responsibility to answer before incorporating AI into their portfolios? Developing an effective AI-driven investing strategy takes time and planning, but it can be invaluable to the success of your portfolio. To get started, investors should first look at their investment goals and risk tolerance. What type of investments are you looking for? What payment periods do you have in mind? With these answers defined, investors need to identify the appropriate models and strategies that will help them best achieve their objectives, as well as collect relevant data so the recommendations can be made based on the analysis. Once a model is chosen and data is collected, machines use sophisticated algorithms to crunch numbers quickly while helping create strategies tailored uniquely towards each investor's needs. This comes with testing performance against historical events before monitoring portfolios continually. This means making sure that any dips or fluctuations provide insight instead of panic. Detailed records that allow this process to become much more smooth than relying solely upon human judgment over slight changes that may go unnoticed otherwise. It's also important to keep regular evaluations tracked. How have certain investments done up until now? Reflecting on whether adjustments could raise returns further while minimizing risk involved can suggest realistic expectations backed by tangible evidence rather than relying solely upon gut feelings alone from the week's past decisions. Taking this seriously is more important than ever when moving forward into the future of business. When implementing an automated approach when addressing finances, tools can make the load lighter and the move quicker, albeit in a safer direction. Opportunities can widen like a door, but when there is one that may find balance between security and caution, especially when unsure and potential dangers, a click of a button can make what issues resemble a gray area hovering around the corners of computing field yet escape notice. The borderlines between technology and finance blur and ethical questions arise, especially when deploying powerful software with such accuracy. It still involves knowing what is right and wrong and the unknown answer that surrounds mining a digital gold mine. Here the question weighs heavily among thoughtful minds: how shall responsible parties respond with good ethics and due diligence to practice on the safe side while not entirely aware of the possible repercussions set in motion? It's no surprise that artificial intelligence in your investing strategy can be complicated and intimidating, but AI-based models do have their own advantages. However, there are still worries about privacy when it comes to personal financial information. That being said, taking a smarter approach to understanding how AI works can give you a more precise opportunity for higher returns than traditional methods, as you watch out for potential biases. What can be the real cost of these advantages in technology in our lives? More importantly, how should we ethically use such complexity when making decisions about whether investments should use machine learning solutions or not? When it comes to an AI-driven investment portfolio, it's important to think carefully about the present and the future, so that the decision makers know what ethical procedures should follow. Implementing an AI-driven investing strategy isn't always easy, and there's no one-size-fits-all model or algorithm. Doing your research is key to finding the best option for you, as different models offer unique benefits when combined with other traditional trading strategies. These strategies include machine learning algorithms for data analysis, natural language processing tools to gain market sentiment, and neural networks to discover patterns in available information. Using these technologies in your investments has many advantages, but potential privacy issues related to personal financial information must be managed properly. Powerful software can make smart decisions based on reliable data rather than human emotionality or gut instinct alone, enabling much more profitable returns overall, with emotionally compared to over methods. It's also important for investors to be aware of any biases within certain AI systems so they don't unknowingly make bad decisions. So how do we use investing technology responsibly while also creating regulations to protect consumers? Investing with AI has the potential to significantly improve returns and reduce risk for investors, but there are still questions about how it affects ethical decision making. With new technologies like predictive text capabilities and enhanced voice recognition software, even experienced traders might be overwhelmed by all the possibilities at their fingertips. That's why it's important for investors using AI strategies in their portfolios to not only consider performance expectations relative to investment goals and benchmark indices, but also broader societal issues like worker displacement due to automation. Whether you're an experienced investor just starting out with artificial intelligence solutions, making sure your investments align correctly will require responsible decisions on both sides. This means asking hard questions about ethics when technology space investing trends, such as what perspective do robots hold when it comes to restructuring the economy financially. Using AI in investments can be intimidating, but it has the potential to significantly improve returns and reduce risk for investors. Different AI models offer unique benefits when combined with traditional investing methods like machine learning algorithms for data analysis, natural language processing tools to gauge market sentiment, and neural networks to discover patterns in available information. However, potential privacy issues related to personal financial information must be managed properly, and investors should consider any biases within certain AI systems. In addition, ethical considerations must be taken into account, like the potential for worker displacement due to automation. With careful research and monitoring, however, AI can open up new opportunities for investments and help make smarter decisions based on reliable data. The next video will be exploring the potential risks and limitations of AI-driven investing. Are you ready to learn more about the potential dangers of using AI to manage your investments? Don't miss out on this important information. Tune in now to the dark side of AI-powered risk trading, risks and limitations.